Welcome to the DX Today podcast, your daily deep dive into the AI ecosystem. I'm Chris, and joining me as always is Laura.
Hey, Chris. Great to be here on this Saturday. And honestly, today's topic is one I've been wanting to dig into for weeks because the numbers are just absolutely staggering when you really look at them closely.
They really are, and that's exactly why we're spending the whole episode on it today, because 2026 is shaping up to be the year of the Mega-IPO, and the AI industry is right at the center of that story.
So let's set the stage here, because we're not talking about your typical tech company going public with a modest $10 or $15 billion valuation and raising a couple billion in a traditional offering.
Not even close to that scale, no, because what we're looking at is three companies preparing to go public that could collectively raise over $240 billion in what would be an absolutely unprecedented IPO window.
Right. So the three names everyone needs to know are OpenAI, Anthropic, and the combined SpaceX and xAI entity. And each one of them is targeting a listing within roughly the next 6 to 9 months from right now.
Let's start with the one that's probably the most talked about on Wall Street right now, which is OpenAI. Because just this week, their CFO, Sarah Friar, made some really significant announcements about how they plan to structure this offering.
Yes, so Friar told CNBC on April 8th that OpenAI will reserve a portion of its IPO shares specifically for retail investors, which is a really big deal because traditionally these massive offerings are completely dominated by institutional buyers.
And what's fascinating about that announcement is the context behind it. Because when OpenAI tested the waters with retail investors during their most recent private fundraising round, they originally set a target of raising $1 billion from individuals.
And they ended up raising 3 times that amount, $3 billion, through private placements handled by JP Morgan, Morgan Stanley, and Goldman Sachs, which those banks reportedly called the largest private placement they had ever facilitated for individual investors.
So clearly, there is enormous retail demand for a piece of OpenAI. But let's talk about the actual numbers here, because the scale of this potential IPO is really something that's hard to wrap your head around initially.
OpenAI is targeting a $1 trillion valuation for its public listing, which they're aiming to do in the fourth quarter of this year. And to put that in perspective, their current post-money valuation after closing their record-breaking $122 billion fundraising round is $852 billion.
A $1 trillion IPO valuation would make this the most valuable company to ever go public by a massive margin. And I think what makes it so interesting is the tension between their revenue growth and their actual profitability situation right now.
That's the key tension that every analyst is watching. Because on one hand, you have annualized revenue that has hit $25 billion, which represents incredible growth. But on the other hand, they're projected to lose approximately $14 billion in 2026 alone.
$14 billion in losses in a single year, and they don't expect to achieve positive cash flow until 2029. So how do you justify a $1 trillion valuation for a company that's burning cash at that rate right now?
Well, the bull case rests on their revenue trajectory and their dominant market position, because their internal projections show revenue reaching $280 billion by 2030. And they're pointing to the enterprise segment as the key driver since nearly half their current sales come from enterprise clients.
That's a compelling growth story if they can execute on it. But I want to shift to the second major IPO in this wave, which is Anthropic, because their timeline is actually even more aggressive, and they've been somewhat quieter about their plans publicly.
Anthropic is planning an October 2026 debut, which would potentially raise over $60 billion. And their financial position is actually quite strong coming into this, having closed a $30 billion Series G round led by GIC and Coatue that valued them at $380 billion post-money.
And one data point that I think a lot of people missed is that Anthropic reportedly now has a revenue run rate of $30 billion, which actually puts them ahead of OpenAI on a run rate basis. And that's a remarkable position for what many people still think of as the smaller challenger in the frontier model race.
It really is remarkable, and I think the October timing is strategic because it puts them right after the summer lull, but before the holiday season, and critically, it positions them to go public either right before or right after OpenAI, depending on how OpenAI's Q4 timeline solidifies.
Now, the third piece of this mega IPO puzzle is perhaps the most interesting from a structural standpoint, and that's the combined SpaceX and xAI entity, which has been preparing for a June roadshow that could happen in just about 2 months from now.
The SpaceX and xAI merger created this fascinating combined entity that is reportedly targeting an IPO valuation of up to $2 trillion, which would make it the single largest public offering in history if they actually hit that number at listing.
And they're planning to raise around $75 billion in the offering, while reserving up to 30% of shares for retail investors, which is actually the benchmark that OpenAI's Sarah Fryer referenced when she was talking about their own retail allocation plans.
That 30% retail allocation from SpaceX is really setting a new standard for how these mega tech IPOs are being structured, because it signals a fundamental shift away from the traditional model where Wall Street institutions got virtually all the best allocation and retail investors were left scrambling on the open market after the initial pop.
Let's zoom out, though, and talk about what this means for the broader market. Because when you add up all three of these IPOs, you're looking at a combined fundraise that could exceed $240 billion within a 6 to 9 month window, which is genuinely unprecedented in capital markets history.
And that's exactly what has some analysts worried, because Fortune ran a really interesting piece on April 7th asking whether these three giants will reopen the IPO market or simply drain it, since there's a real risk that they suck up so much investor capital and attention that smaller AI companies and SaaS startups can't get their own offerings done.
It's the classic crowding out concern, right? Where institutional investors only have so much capital allocated to new IPO investments in a given quarter. And if OpenAI and Anthropic and SpaceX are absorbing hundreds of billions of dollars, what's left for everyone else waiting in line?
Exactly, and there's a meaningful backlog of AI unicorns and enterprise software companies that have been waiting years for the IPO window to reopen, many of which raised their last private rounds at peak 2021 valuations and desperately need a public market exit for their investors.
On the other hand, the optimistic view is that these mega IPOs could actually catalyze a broader reopening by generating enormous excitement and bringing new capital into the tech IPO market that might not have been allocated there otherwise.
Right, because if OpenAI goes public and the stock performs well in its first few weeks of trading, that creates a halo effect that makes institutional investors more willing to look at the next tier of AI companies, and it also brings retail investors into the market who might then diversify into smaller AI offerings.
Let me play devil's advocate here, though, because there's a scenario that I think a lot of people aren't talking about enough, which is what happens if one of these IPOs underperforms or if market conditions deteriorate between now and the fourth quarter of this year.
That's such an important point because we're essentially looking at a situation where the entire second half of 2026's IPO market is riding on these three names executing flawlessly. And there are real risks, including macroeconomic uncertainty, potential regulatory changes, and the fundamental question of whether these AI companies can actually grow into their valuations.
And specifically with OpenAI, there's reportedly some internal tension between CEO Sam Altman, who is pushing hard for a Q4 2026 listing, and CFO Sarah Fryer, who may be more cautious about the timeline, which suggests that even within the company, there isn't complete alignment on the readiness question.
That internal dynamic is really telling, because the CFO's job is fundamentally to ensure the financial story holds up under the intense scrutiny of public market investors and SEC filings, and if she has reservations about the timeline, that could indicate the financial narrative still needs work before it can withstand that level of examination.
Let's also talk about the retail investor angle more broadly, because I think this is one of the most significant shifts in how major tech IPOs are being structured, and it represents a real democratization of access to these landmark investment opportunities.
Absolutely, and I think the demand data tells the story better than anything else. Because when OpenAI offered private placements to individuals through those major banks and raised $3 billion instead of their $1 billion target, it showed that there is a massive pool of retail capital that wants access to frontier AI companies before they even hit the public market.
The question is whether that retail enthusiasm is based on a sophisticated understanding of these companies' financial positions, or whether it's more of a FOMO-driven narrative trade, because at a $1 trillion valuation with $14 billion in annual losses, OpenAI is priced for absolutely flawless execution over the next decade.
That's a fair concern, and historically, there are plenty of examples of highly anticipated IPOs where retail investors got burned by buying into the initial excitement. But I would argue that the AI revenue growth trajectory is genuinely different from previous tech bubbles, because these companies are generating real enterprise revenue at massive scale.
That's true. $25 billion in annualized revenue for OpenAI and $30 billion run rate for Anthropic are not speculative numbers. These are real commercial businesses with paying customers, which does differentiate them from, say, the dot-com era IPOs where companies were going public with minimal revenue.
And I think the enterprise adoption angle is really the key variable to watch here, Because if these companies can continue expanding their enterprise contracts and proving that AI tools deliver measurable return on investment for businesses, then even these enormous valuations start to look more reasonable over a 3 to 5 year horizon.
So as we look ahead at the next 6 months, what should our listeners be watching for as these 3 IPOs move forward? Because there are going to be a lot of milestones and signals along the way that will indicate how this mega IPO wave is likely to play out.
First, watch the SpaceX and XAI June roadshow very closely, because as the first of the 3 to market, its reception and pricing will set the tone for everything that follows. And if institutional demand is overwhelming at or above the $2 trillion valuation target, that's extremely bullish for OpenAI and Anthropic.
Second, keep an eye on the regulatory landscape because the SEC is going to be scrutinizing these filings very carefully given the unprecedented scale. And any delays or complications in the review process could push timelines back and create uncertainty that ripples through the whole IPO calendar.
Third, and this might be the most underappreciated factor, watch for how the secondary market for pre-IPO shares behaves over the summer, because those prices will give us a real-time signal of institutional investor sentiment and could either validate or undercut the ambitious valuation targets these companies have set.
And finally, pay attention to any shifts in the competitive landscape between now and these listing dates, because a major model breakthrough or a significant customer loss for any of these companies could dramatically change the investment thesis in either direction at the last minute.
I also think it's worth noting that this IPO wave represents a maturation of the entire AI industry. Because when frontier AI companies are confident enough in their revenue and growth trajectories to submit to the transparency and scrutiny of public markets, that's a fundamentally different signal than when they were staying private and raising round after round at escalating private valuations.
That's a really great point to end on, because whether these IPOs succeed spectacularly or face challenges, the fact that they're happening at all represents a new chapter for artificial intelligence as an industry, one where the biggest players are ready to stand behind their numbers in the public market spotlight.
And for everyday investors who have watched the AI revolution unfold from the sidelines, this mega IPO wave represents the first real opportunity to own a direct stake in the companies building frontier AI, which, regardless of what happens with individual stock prices, is a genuinely historic moment in technology investing.
That's all for today's episode of the DX Today podcast. Thanks so much for listening. We really appreciate you spending your Saturday with us, and we'll see you next time.